I have on the call with me Tina Clark. Tina she is specifically for our region. Maybe she covers some other regions, but we're going to pretend like we're the only ones that she has to take care of. We want to feel special. So Tina, just go with that story. But she is our point of contact for renovation loans. So you see her right here, Norman, and I guess it's just you and me today, and you're way too far back there for it just to be you and I. So Tina is very experienced and has been doing renovation loans for a long time. So the way it works is if you guys have a house that you're going to go look at, and you know that it's going to need a lot of work because grandma's lived in it for 50 years and hasn't done anything else to it, but just lived in it. And you got, right now, people coming up with enough funds to even purchase the house is a challenge. So having enough funds left over to fix the house after they purchase the house is even more of a challenge. So the renovation purchase program is a great option. There are also times where you guys get a contract and you send the inspector out and all of a sudden you're looking at the inspection and it is horrific. But the house is located exactly where people need it to be. And, you know, the floor plan is exactly what they need it to be, but there's problems with the house. And the seller says, hell no, I'm not fixing it. I've got a cash offer. I'll just take that next offer. I'm not doing that. And so then you got a situation where the buyer either has to take the house with all of its problems, and you guys hope that if we spend the money to get an appraiser out to look at the house, that those aren't lender required repairs that the seller's refusing to do. So that's when we would have that conversation where, well, what if we flip this loan to a renovation loan? What would that look like? And the buyer just go ahead and buy the house and do the repairs or improvements that they want to do. So we're going to work through some of those scenarios and how this loan works. I can tell you from experience, from just doing this in this area for the last 25 years, I have not had anybody that I trust. When you guys call and say, hey, do you do 203K loans? I have always said those loans do exist. They're a nightmare. I don't know anybody that does them. And if I did, I'd be really hesitant for you guys to experience the 203K process. If you're going to do these types of loans, you need to only do these types of loans because they're complicated. And that's why I'm so excited that we have Tina Clark now available.
It didn't matter. And she did not.
You guys be sure to mute yourself. I will try my best to mute. Okay. So if you guys are going to show a house and you know it needs a lot of work, maybe the roof is in bad shape, the foundation's in bad shape, or you know your people were really insistent on having a pool in their backyard, and you're looking at houses that are exactly what they are looking for, except it doesn't have a pool. That's a conversation that we can have, showing them what the numbers would look like if we were to do a purchase plus renovation loan. We have the option to do these as a conventional or an FHA. And if you're doing FHA 203K, we have the full 203K and the streamlined 203K. And Tina will help me go through and show you guys the differences in those options. We can also do it as a refinance. So if you've got someone that is thinking about selling their home, but they're not quite really sure, and there's some things that they probably need to do to the house to make it more seller ready, and they're just going to sit tight. I mean, you wouldn't want to use this renovation loan as a refinance for your seller unless you knew your seller was going to be in the home for a little bit and they were going to put off selling for a year or two, because there's cost involved. And we also don't want them to use our program in that scenario if they're going to pay us off within the next 7 months, because it's just going to I'm going to get charged back for that loan if that happens. So this is not one of those fix and flips loan programs. If that's what you're going to do, we need to have a different conversation. So does anybody have any questions thus far, or some experiences that they want to talk about?
Aren't these primarily for owner-occupied properties?
That's a good point. So Norman's question was, is this just for owner-occupied properties? On the FHA, yes. On the conventional, no. You can do these. You can do a purchase plus renovation loan on investment property. You're going to just have to have 30% equity. Right, Tina? Is 70% LTV on investor home style?
To purchase 15% down.
Investor?
Yes, 15% down minimum, and second home is 10.
Okay. Pricing wise, that's going to be a little bit tougher to do the 15% down, but we can always look at those scenarios. So just know that that's also a conversation. So the program could be used for some of your investors that have enough money they could pay cash, but they can't pay cash and do all of the improvements. So we could be looking at shuffling some numbers around to help them. Hey, Kim, help them get into the home, get it fixed up so they can rent it out. So there's all kind of different scenarios that we could talk about. So I'm going to share my screen, go through the slides, and I'm going to ask Tina to add to or answer any of the questions that I'm not comfortable answering, which is going to be the majority of y'all's questions. All right, can you guys see the slides? Is that what you're seeing right now is the slides? Tina, shake your head.
Yes, I can see the slides.
All right, awesome. I'll slide you guys here because I know it's distracting when you see your own face on the screen. Well, all right, it's just the way it is. All right. Yes. Before I get started, Kim was moving the flyer around. So we are going to have a summer series of classes. I wanted to focus, they're not going to be CE classes, they're just classes. And I really wanted to focus a lot of time on social media and branding and videos and some of that stuff, just because it's a fun subject for me. And it's lighthearted stuff for the summer because I figure attendance would be low. Everybody's got vacations and kids are all busy, and I understand. So if you don't know what classes are coming up, I have, if you go to michellecastle.info and click on the education tab, the whole summer series of classes and the schedule is on that tab. And then I'm going to send reminders out to each one of you guys as an email with all of the information on the upcoming class and a link to register. If you're going to attend the class, whether you attend in person or not, go ahead and register online on Eventbrite, because that's the mailing list that we use to send you guys a copy of the class handouts. We send the recorded version of the class, so you guys can always go back and rewatch and pick something up that maybe you missed when you were making notes. And then you will have information on the upcoming class with the link to sign up for that. So even if you're going to be here in person, go ahead and use the Eventbrite link to register, please. In one of those classes, I think it's next week. I think it's next week. Was the video editing class, teaching you guys how to use your phone to shoot videos, edit videos, and post. And I have a medical procedure. I hope to get my pancreas fixed in the very near future. And if this doctor can't fix it, I already have an appointment at the Mayo Clinic. I am committed to getting my pancreas fixed this year. So there are a couple of classes. Huh? You can't remove your pancreas. You can get a transplant though. Deborah Bird from Plug and Play SM, who is a wizard at this stuff, is going to come and cover this class for me on the video editing. So talk to those in your office and let them know what classes are coming up, and you guys pick what classes you really need or come to all of them. But I wanted to make sure that you guys had some good content, and if y'all are thinking about rebranding or any of that, now's a great time to do that. So I wanted to provide the resources for y'all to do that. All right, we're going to hop into this class. The renovation, using the renovation loan to create your client's dream home, help them make their home what they want it to be. So what we're going to cover is what is a renovation loan, the different types of renovation loans, what repairs or improvements can be made under the program, and then what's included in the loan, how much can you roll into the loan amount, the advantages of a renovation loan, and then any important tips that we have for you, and then how it's all wrapped up and put together and processed all the way through. And then I'll remind you guys of why you love Guild so much on the last slide. All right, so what is a renovation loan? So the renovation loan can be used on a purchase or a refinance, and it's really allowing us to just take the cost of any improvements or repairs that the customer wants to make and roll them into the loan amount. So you guys remember, whenever you're doing this, because it's a fixed rate mortgage, they have to be really clear about what work they want done. You guys have written a contract with timelines in that contract. And if you don't meet the deadlines on those timelines, you might lose the contract. So knowing that the customer is going to use this loan program is really important to know up front when y'all are writing the contract. Now, if you find out after the fact because of repairs or whatever, then you need to know what is the timeline that you need to be considering when you're asking for extensions. So in that scenario where you've got a terrible, ugly inspection and the seller says, absolutely not, I'm selling it as is, already told you that up front, why are you asking me to do any work on this house? And the buyer still wants the house. Well, now it's time to get some extensions, because now this buyer has to find people who will bid the job to do the work that needs to be done. And while they're going to do that, if they don't like the wallpaper, or they don't, because we're saying wallpaper again, if they don't like what they see in the house, they can go ahead and do some of those cosmetics and roll it all into one loan. It works also on a refinance. So there's endless possibilities. You guys, if you are really, really good at the before and after pictures, or if you're really good with some of those websites that you can go to and load a picture as is, and you can play around with the picture and change things out and show people what could be, that would be some really fun marketing. If you've got an ugly house, you can market before and afters. You guys be sure you're muting yourself. You're on Zoom. We might hear a conversation you don't want us to hear. So there's marketing advantages to knowing and understanding and really promoting yourself as someone who knows how to help people buy a home, fix it up, and make it their dream home, where construction right now is so tough.
So purchase a home as is and make repairs after closing.
Correct.
But these items are, the repair costs are there. And at closing, it's going to be there, but there's a time frame.
Yes.
So what are we
We're gonna
talking?
get to that.
Yep, we're getting there.
Okay,
Yep,
fine.
we're getting there. But write that question down, because that's a great question we want to be sure to cover. Kim was just talking about the timeline of all of, when do the repairs get done? How is the money set aside and all of that good stuff? And we're going to be sure to cover it. All right, you guys, we've already talked about the fact you can do it as a conventional loan or FHA. If you're doing it as FHA, it's owner occupied only. All right, so if you're doing a conventional loan, it's owner occupied second home or investment properties. Now, you guys remember, on a conventional loan, you can do as little as 3% down. But the customer has to be, Tina, is this one, if you're using the Fannie home style, the 3% down is income restricted, or you have to be, one of the parties has to be a first-time home buyer? I can't remember which of the two.
One of the parties has to be a first-time home buyer, but there is no income restriction.
Okay, so it's Freddie that has the income restriction. Fannie and Freddie are still considered conventional loan. They have little quirks about them all. Okay, so if you're going to do 3% down, if you're going to propose to a customer that we look at a conventional loan, make the renovations, roll those renovations into the loan. If we're going to do it with this little, and you're going to write a contract at 3% down in that scenario, you better make sure that at least one of those two customers on the application is a first-time home buyer. And a first-time home buyer is defined differently depending on the program. But in this case, first-time home buyer is someone who has not had ownership in a home in the last 3 years. Okay, so if they sold their house 5 years ago when they were married to someone else, and they haven't owned a home in the last 5 years, they are considered a first-time home buyer again for that 3% down scenario. I know you guys don't feel comfortable speaking on the behalf of the lender, but you need to have an idea what might be possible so you can tell them what questions to ask their lender. And that's a good question. You finance up to 6 months worth of mortgage payments, which is super cool. If they have a house that they currently own and they buying a new house that they plan on living in, but they are going to get the house first, they can't live in that house yet. But they would have 2 mortgage payments, right? Because they just bought a house. Well, you can roll up to 6 months worth of mortgage payments into the loan amount on a conventional loan. So we'll go over that as well. Yeah, I know that those of us that have been around for a little while, it's like, hey, you really don't want to do that, but it is possible. Yep. So structural improvements can be made on the conventional loan. We have moving soil around here. And so oftentimes we have houses with cracks that need a little bit of work. So this is a good alternative. Then you have the 203K renovation loan that you do have to, on FHA, it has to be your owner occupied. There is no maximum repair amount. Remember, FHA is 3.5% down payment. So they could buy the house, roll in $100,000 worth of improvements and still be at 3.5% down. However, we'll go over in just a little bit. It does have to appraise as is and subject to the improvements. So, you know, that would be the only challenge in that scenario if you are trying to get someone into a house with very little money out of pocket. You can roll in the structural improvements. There are some exclusions on any landscape that they're wanting to put in. Tina, can you do sprinkler systems? Is that considered landscape improvements that is financeable?
No, on conventional, we can pretty much do anything. We can do pool, landscaping, luxury items, all of that. On the FHA options, really the only we can do anything hardscape. So we can do porches, patios, you know, any of that type of thing. Nothing green is what I sort of always explain to them. So no grass, no plants, that sort of thing.
If it can die, we can't finance it in.
Exactly.
Okay.
Sprinkler system will die.
Yeah, sprinkler system is infrastructure.
Sure adds efficiency to the use of your water resource.
Is it?
I couldn't hear that.
I know. I'll tell you. Sprinkler systems. That is a hard cost. It's infrastructure. But can you finance that in? Because that's an energy efficiency thing.
I don't know that I ever have on the FHA in all these years of doing it, to be honest, because usually that goes with sod. You would do that at the same time as grass, and we can't do grass. So it's rare that someone would do that without the green part of it.
It's possible it'd work. I'm never scared to try as long as everybody knows we're trying something we don't know about.
Yeah, we can find out for sure.
That's right. And then the limited FHA is a lot easier to do. We don't have to use the consultant, which is a big deal. The consultants is just another person telling us what we can and can't do in regards to the improvements and its expense. Hmm?
Who's the consultant?
The consultant is, it's a HUD designation. So we have to go onto the HUD site and find an FHA 203K consultant online. So no, it's a specialty. Tommy Richardson used to be one for us, and Tommy has passed, so we don't have anybody local anymore.
So do they have to actually be on site for anything, or it's all virtual and
Tina, the consultant is going to come to the site, right?
Correct. They will do an initial inspection, meet with, it's just one sort of extra level of oversight. Some people love it, some people hate it, but it is, on a bigger project, it is good protection because they literally walk them through the very beginning all the way through construction. They'll inspect, they're kind of tasked with making sure that the property will meet FHA standards in the end. And then they'll work with the contractor and the buyer to kind of line item everything out the way we need it.
Hey, Tina, because we're in a more rural location, would you make sure that we know who our 203K consultant would be for this area? There's probably only one or two that would come to Sherman, especially with gas prices. So I just, they get paid, but yeah, I mean, they're still netting out less because of the expense. But would you make sure, I would rather be fully prepared for a 203K full than have to scramble at the last minute under deadline.
I usually order through a nationwide company and he places it. So they pretty much have inspectors everywhere that can do the local inspections and work with a HUD consultant if they're not so close.
Yeah, but where we're at, we're like on the moon. I mean, like that's how a lot of people treat us. I mean, whenever you are asking someone to come from the Dallas area. So there's not enough activity. Anyway, so we'll find that out, you guys, because I don't like unpleasant surprises. Now look, you guys, at some of the eligible repairs or improvements, we could help someone increase their square footage by building up.
That's Christy.
We could help them by putting a she shed out in the backyard or a granny pod out in the backyard. I mean, think of the possibilities. I know I was working with a client the other day, and what was really important is to have a mother-in-law suite. And it was really hard to find a house with a mother-in-law suite. So what if we used a conventional home style loan and we gave them a place to live in the backyard? City, provided the city would allow it. So just think of the possibilities. How could you even market yourself as a renovation specialist realtor who knows and understands the possibilities when you're showing the home? Kitchens and bathroom remodels. Heck, you guys know that's where it's at. It's expensive, but that's what people are looking for. They don't want laminate anymore. And then your cracked slabs and structural damage. It happens in this area. And how many deals, I can't even count how many deals have been terminated over structural repairs that need to be made, and the seller doesn't have the funds to do it. And then you got the electrical and the plumbing and the heating and the air conditioning upgrades. What if you wanted just to upgrade because you're looking at the unit outside and the inspection says that the unit is at the end of its life? How cool would that be if you could go ahead and have an energy efficient unit in that house to replace that old rusty unit that you know is about to die? Yes, you can get a home warranty on it, but the buyers typically don't renew that home warranty after 1 year and it dies at year 2. So, and then think of all of the other possibilities in flooring and all of the things that we do now differently from a lifestyle standpoint, and just the quality of the quality of life that increases whenever you do some of these improvements. So if you run across a piece of property and you think, oh my gosh, we could possibly use this program and do some of these repairs, but you're not absolutely sure, shoot me a text and say, hey, I'm looking at this address. Here's the MLS number. Will you look it up? I don't have access to the MLS, but I can, look it up. Send me pictures, ask me questions. And if I don't know the answer, I'm going to go straight to Tina and she does. So lifetime feedback. If you guys text me, you guys can do that in any scenario. If you're looking at a house and you're not quite sure if the house will go FHA, or you just have any questions on how you should write a contract, even if I'm not the lender on the transaction, I've been doing this for a long time and I typically know the answer, or I at least know what red flags to throw up for you guys to go do some more research or ask somebody else. So don't ever hesitate. So I'm available.
Internet connection is unstable.
Here.
You're kidding me.
I know, right? It's hard to believe.
I think the internet, are you guys having, Tina, is the internet stable, inconsistent on your end?
Mine isn't.
Okay, I haven't seen any buffering. So you guys make sure you have my number in your cell phone for anything that y'all need to develop and elevate your business. That's what I'm here for. I'm helping you guys elevate your business. The team will take care of your clients and they will take care of the transactions. I'm just here for you guys to make sure that you guys have all of the tools and resources you need to be your best. So always make sure you have my number, and you always make sure that you have the team number. I have a contact saved in my phone exactly with all of the information to reach everybody with all their phone numbers. So if you'll send me a text, then I will reply back to the text with the contact that you should just save in your phone. If you have a contact for me already in your phone, go ahead and let it update because this has got more information. And my cell number is 903-815-3277. I've had that number for 30 years. Yeah, Norman's going, you've had that number forever. I have. All right, so on a renovation loan, what are we going to roll into that loan amount? Well, we can roll in, obviously, the cost of the repairs. We're going to collect a contingency reserve because you guys know that cost, we don't know for sure what something is going to cost. And chances are it's going to be a little bit more than we thought. So we are going to hold out some extra money for reserves. If we don't use that money, it will get applied back to the loan. They will not get the money back in cash. The reason is we've already closed on a 30-year loan. We can't change the terms of the loan without refinancing. So if there's any money left over, they either use it or we're going to apply it to the principal balance.
10% contingency?
Isn't that a 10% contingency, Tina?
It is standard at 10%. If it's a large project, sometimes people opt to do a 15 or 20 if they choose to, or if the utilities on, for example, a HUD home, if the utilities literally cannot be turned on, we'll hold at least 15% to make sure once they turn those on that we have a little bit of a protection for them to get anything extra fixed.
Love it. Thank you. And then we have up to 6 months of mortgage payments that we can use. Depending on the loan program, we can do that on the full and we can do that on the home style. Can't do it on the limited 203K because we're limited at 35,000. So, and then the consultant fee, if we're doing a full 203K, is included into that loan amount. So is the title update fees, because you guys remember in Texas, your title commitment ensures from the day of closing back. It does not insure forward. So you're having work done on your house.
Property's worth more money and you need to raise that limit.
Well, that, and every time you have a contractor on your property, we got to make sure that the work was complete and the contractor was paid and they did not file a mechanics lien. So they're going to do a title update whenever we are working on these transactions. So there's some title update fees that get rolled in, as well as the supplemental origination, inspection fees for the draws. There's not a set number of draws they have to agree to, but it is determined that we expect this number of draws, correct, Tina?
It is, and it's going to vary by the program and the scope of work, how large the project is, but basically anything that's related to the rehab, we can finance that. So none of that has to be out of pocket or upfront.
Hang on 1 second, I gotta get water. All right. And then any of the other engineering costs or any of the permits that are required can all get rolled into that project as well. Now, the advantage of the renovation loan, you guys can only imagine all of the advantages of doing a renovation loan. We've just got a lot of, especially right now, you got a lot of sellers not willing to do anything, and some of their houses are really not sell ready, but they're hard-headed. They don't have to, and they're not going to make the repairs or improvements that need to be done. And then you've got some where just the customer, just based on price point, or they can't find what they're looking for. If you guys could bump down on price point, but roll in some improvements, would they be better off? I mean, does that change the amount of houses that are available to them if you don't have to worry about the house being perfect and you could make it perfect? So getting the funds to work. So after your buyer's loan closes is when we will get the work done. Now, at one point in time, and Tina remembers, my branch was the only branch in Texas that was processing originating renovation loans. And that was in 2018. But at that time, we were still using another construction loan administrator called Land Gorilla. Well, we no longer have to use that. We are all in-house, one department that handles it all. So, and Tina is our go-to for all of it. So we've really streamlined that entire process. But the construction loan administrator, which is now us, right, Tina? We're the CLA on these transactions?
Yes, the only thing that Land Gorilla does at all is admin, ordering the inspections. Basically, we hold the money, we handle change orders, we handle all of it.
So the customer closes on the house, they get to work and doing the repairs, and then as they need money, they're going to request a draw. We're going to inspect the work and make sure that the work was done for the amount of money that they've asked for. You know, the draw request. We'll inspect the work and then we'll release the funds. What's that time period look like, Tina?
As far as from when they submit to receiving funds, what I generally tell them, so it depends on the area and how long it takes the inspector to get back out. I usually tell them if they know they're going to be ready for a draw, say Friday, start the process on Monday. You know, they'll send the inspector, the inspector will call them, they can schedule for Friday. As soon as the inspector is done, they'll submit that, we'll sign off on it. And once everybody is signed off, the contractor signs a mechanics lien waiver. The buyer will sign off that they're happy with the work to that point. And then within about 24 hours, we release the funds.
Are we wiring funds?
Generally, unless they opt for a check.
Okay.
And they
We're
could
gonna-
choose to,
We're
but
gonna encourage wire because I don't want anybody calling me because check got lost in the mail. So that's the short version. But I know you guys have got a lot of questions. Remember, in what I'm putting together, and I would love some scenarios, and this would be really helpful for you guys. Whenever a customer comes to us, we fully pre-approve the customer. Now, I want to remind you guys, it takes longer to get pre-approved by us because we are extremely thorough on the front end. We want that file, and in this case, most of the time we're sending the file to the underwriter and getting an underwriting approval before we send them out house hunting. It takes a little bit longer, but it's the best way for me to ensure that the closing's going to go smooth and on time. I want all of that out of the way. And we'll do that on these renovation loans too with some projected cost. So when you guys are doing these transactions, renovation, a lot of times you have an idea how much it's going to be. We're going to put together what we call our total cost analysis. We're going to have one column that says purchase as is. And then we'll have another column that'll be like, okay, if you were to purchase this $275,000 house and spend spend 100 on it, then what would those numbers look like? Now you guys got to remember the appraisal is going to be done as is and subject to. So what if the house doesn't appraise for the full 100,000 that they're going to spend? What would that scenario look like? Because you guys have a pretty good idea. Y'all are really smart. You know how to run CMAs. So I would prefer for us to put together some what if scenarios for them so they're fully prepared for what could happen if the appraisal doesn't make value, but they still want to do the work. What would the money out of pocket look like? And we have to rely on you guys to run the CMAs because I'm not an expert on that end. I can shuffle money around and I can find a way for people to buy whatever they are looking to buy. Maybe not today, but I will find a way for them to buy whatever they want to buy within reason. A jet airplane, I can't help them with. But I don't know values. I don't have access to the MLS, and that's not my lane. So I'm not going to be in that lane. I'm going to count on you guys. Yeah. I mean, I'm not, I've bought and sold and I see a ton of appraisals. So I have a really good educated guess, but that's what it is. I don't have the data to back up my educated guess. I'm usually pretty right on, but still, I don't want to be responsible for that part. So we're going to rely on you guys to tell us, this is more than likely, these are the houses that it would probably be comp to if they were to do this flooring, these countertops, these fixtures, and they add, an outdoor kitchen. These are the new comps that I see versus the as-is comps, because the appraiser is going to have to do both. And their loan to value, their down payment is going to be based on the appraised value or the sales price or the appraised value plus a hard cost, whichever is least. The lowest of those is how their down payment's going to be figured. When y'all write in the contract, your down payment on that contract is still going to be based on the sales price because you don't know any different at that point. But when we're putting together the what ifs, I want the what ifs because I want to prepare them. I always like to hope for the best, prepare for the worst. Worse, I said that wrong. So we have to rely on you guys. And then we have Tina helping us too on the renovation side to make sure that we have all of the fees calculated in there correctly and all of that. So we're building out templates. But what if you guys had a house that you listed? It's an ugly, ugly house. It's so dated, seller won't do anything. And you guys are really good at, I don't want to say Photoshop because there's way more apps than that are not as complicated as Photoshop. But what if you could go in there and do a before and an after picture and show people the what ifs? And then I can put together a scenario showing them what the numbers are at it as if. And then you create a flyer and it has a QR code, and that QR code, when they take a picture of it, will go straight to the numbers with the what ifs. And they could see this house at 275, but if you did this and this as the pictures are showing, then you would borrow about X number of dollars, and this is what the payments and the out-of-pocket would look like. And expand people's minds on what could be. I'm gonna turn off these slides and open it up for questions, which is why Tina's on the line, because I don't want to tell you guys wrong, because I get overly excited and start daydreaming all of these what ifs, but she's gonna keep me where I'm supposed to be. Danny, you got any questions? Do you have any scenarios you've ever seen before that you want to talk through, or wish that this was available because it could have saved a deal?
Well, many times, especially out around the lake, we find very dated properties, and whereas I've even gone in and they've got poles holding up the ceiling, but they're not going to back off on price because of location. And I think this program would be very good for somebody that, they're dead set on getting that property, but it's got its little problems. Anything from roofs to interior work that needs to be done, or just updating it to current standards. But I see a lot of that around the older lake properties and the older neighborhoods out around the lake, especially out on the point and things like that. So I think it's a good program, and I can refer people to it.
I'm super excited, but here's another scenario that I see, and I promise I'm not being Debbie Downer. I'm like one of the most positive poly people typically, but I find myself thinking the Debbie Downer thoughts. So here's my Debbie Downer. Right now, my biggest concern is people are in the middle of a project and you got rising costs. I don't know if you guys are tracking people's credit card charges. Credit card charges are going up and up and up and up. In December already, before we had all of these increased gas prices and just the increase of everything, credit card charges were already at record highs in December. And here we are 6 months later. So what happens when credit card balances go up? What happens to credit scores? Credit scores go down when balances go up. And now all of a sudden too, they have just everything is more expensive and interest rates are more. So they're in the middle of a construction project or in the middle of a remodel project and they have to go King's X. I can't handle this. It is going to be more expensive than I can afford. At what point, Tina, can we swoop in with the renovation loan and finish out a project for the new buyer? How far along do they have to be for us to do that?
So as long as it's an existing house that they started, the only real restrictions on that are if it is a new build that's never been completed and never had a certificate of occupancy, then it has to be substantially complete, which basically means exterior done and at least drywall hung inside so all the rough-ins are in. If it's an older house that's been previously lived in and it's completely gutted, we can take it from that point to completion. There are no restrictions on that piece.
Can we do lock and shop on a renovation loan?
No.
Okay. So you guys, another thing that we're doing for people right now to give them peace of mind while they're house hunting, if they're seriously house hunting, for a $1,500 upfront fee that does get applied to the closing cost of closing, we can lock in their rate at a ceiling rate right now. On the renovation loan program, we can't lock in the rate while they're shopping. Now, if someone is shopping and we lock in their rate now while they have
people buying.
Hey, Christy, mute yourself. In that scenario, we have to close and fund within 120 days.
I don't know
money and the lock.
how much or what, but
DJ,
I do know that there is a
mute people.
foreign group that has bought
Hey, Christy, mute yourself. We
some
can
land over there. Hang on, let me see.
You should be able to.
Because I met a gentleman that he said that he had bought it.
Yeah, I'm gonna have to. This is the corporate account, and they've restricted some of my.
Shazid
I'm
Nathani.
gonna text
Okay,
Christy.
so this
Never mind,
guy
I'll text her.
has.
I don't want her to say something that she's like, "Oops, I didn't mean I said that out loud."
He has 22 acres.
Mute yourself. So
he has like 20 or 22 acres.
we can't lock them in while they're house hunting. They have to fund within 120 days. The other thing that we're doing some of is if someone's building a house, then you have concerns that what is the rate going to be when the house is complete, when you can't even really predict when the house is going to complete. We can lock construction loans up to 360 days. So
Michelle,
almost,
another scenario that I have run into, especially with the aging of America, a person or a couple pass that have a older lake property, and they do have a will, so they don't pass intestate, but it goes to 3 children. The 3 children are selling the home. Can that estate per se get a renovation loan to be paid
Ooh.
from proceeds of the sale?
Well,
Well, go ahead, Tina.
so they're planning, they could sell it to a buyer who would use a renovation loan. I mean, that would generally be the way to do it. So they're wanting to sell it, but it's basically can't be sold in the condition it's in, correct?
Yeah, if they just want to get it up to standards so that it would bring more money to the estate, especially if they're paying off their parents' medical bills, funeral services, things like that.
Gotcha. Well, and it would have to be in their individual names. So depending on how the estate was set up, we would have to do the loan, but technically they could do a renovation loan on it. We would just need them to keep it for a certain period of time. It's not really for fix and flip. So we wouldn't want them to do that and then 2 months later turn around and sell it. Although I will tell you that the rehab portion is part of the 6 months that we need technically. So on a larger project, the rehab is going to eat up a lot of that time that we need them to hold it.
Okay.
Technically. So I would say something like that is more case by case, and we'd have to talk through what the project is and what the timing truly is for them. Yeah,
that makes sense. Okay, thank you.
That's a great question. The other scenario, and this is where I thought you were going, Danny, is what we have seen and heard a lot about is the passing of a grandparent, and one of the family members wants to buy it from the estate and do the rehab. And in that case, Tina, we should be fine, right?
Yeah.
But it's a gift of equity too. But that part doesn't matter. Okay.
Yeah. No, we would be fine like that. We would just handle it like a normal transaction at that point.
Okay, great. Thank you.
You guys know if someone is buying a house from a family member, let's just say the scenario is that all of the siblings are okay with $150,000, but the house is really worth $200,000. But they all agreed that they're okay with $150,000 to let the grandkid and their family buy the house. The grandkid that's buying the house for their family can use that equity in the home for their down payment and closing costs. And it would be a gift from all of the other siblings to that grandkid in that scenario. We do that a lot. So if you guys have a property that was inherited and someone wants to buy that property, send them our way, and we'll let them know what the possibilities are. But it's very possible they won't need any money out of pocket in that scenario, because if there's enough equity.
Michelle, is that called a gift of equity?
Yes, gift of equity. So they're gifting the equity to a family member. The other thing that we're hearing a lot of is people are in a home, the landlord wants to sell the home, the tenant's in the home, and of course the tenant knows everything that's wrong with the house. They've been living in the house. And they want to buy the house, but they don't want to buy it in the current house's condition, in the current condition. This is another perfect candidate for a renovation loan. What's another?
So is there a 6-month time period that they have to have the renovations finished?
After closing?
Yes.
Yeah, so on FHA, the contract reads that the work has to start within 30 days and it can't stop for a period of more than 30 days, which really is to keep the contractor moving. Because, we've already approved the contractor and set the money aside. What we don't want is for them to take another job because they know they have this one and kind of stall us. And on FHA, they have to be done in 6 months. On conventional, it's either a 6 or a 9 month time frame, depending on the project. And it can technically be extended on conventional up to 12 months if it's a large project. So they have plenty of time.
Barbara, do you have any scenarios or questions?
No, just really wanted to know what's the interest rate difference between a rental loan and just a straight conventional? What are they looking at as far as what rates would be?
Generally, on a purchase, they're going to run about a quarter higher.
Oh, okay.
So small difference, but not exorbitant.
Okay.
On the refi, since we've mentioned that a couple of times, we don't consider the rehab cash out. So it generally runs actually a little bit less than a cash out refinance would.
Okay, and what are cash outs running right now?
Man, today we actually received lower rates, so it has truly been a yo-yo. I'm gonna just depending on the scenario, you're still gonna be in the low to mid 5s on a cash out refinance 30-year loan. Typically, you have to have higher credit scores on those cash outs.
Right.
So,
and what's the debt ratios on those?
you know, there's not a hard as long as the automated system is okay with the risk of a higher ratio, there's not a hard stop. But
Okay.
typically, what we see, Tina, and you can tell me that I'm wrong. I don't care, because if I'm wrong, I'm wrong. But typically on an FHA loan, a 54% debt to income back, the back end being 54% is typically the highest we can get away with. On a conventional loan, if you go over 44.5, typically we have issues.
Okay. And so as far as cash outs are concerned, I occasionally will have a client ask me, are you looking at roughly a quarter or half higher than just a straight purchase?
It's about a 1/4% difference.
Quarter. Okay. Okay. That answers mine. Thank you.
You're welcome.
So to get prepared for one of these, do you just have to bring comps with what the house is now and what it would be with the improvements, or do you have to get actual estimates from whatever the improvement is going to be?
If we're in the pre-approvals part of the process, then just give me some comps and your best guess on what you think it's going to cost. If they end up getting really serious about it, I would get some as close as possible some real numbers. You guys, if this is going to be your jam and you're really going to talk more about this and really market around this, then make sure you have some subcontractors that you have good relationships with, because that's the hardest thing to find. And you guys are realtors, so you guys should know your contractors that you can call in. Start up some relationships if this is going to be your jam. Now, if you only wanted this information so that you were prepared in the event, the onesie-twosie situation where this comes up, then, you're not going to necessarily have an established relationship with a couple of go-tos, but you still, you guys were in the housing business. So those are just some of the things that we should have a general knowledge about. So we'll just have to go off of best guess until we have some more firm numbers.
As far as the contractors are concerned, I know you have to have licensed professionals in any area that requires those. Do they need to have a GC, or will the consultant basically act as that person?
That's a great question. I'm glad you asked that. Tina, address the family member thing too when you address that.
Yeah, so the conventional program and the standard 203K, so generally the larger projects, require a general contractor. We will vet the contractor for them, so we check, and in Texas, technically for the state, a license isn't required. There's some municipalities that require some sort of registration. We'll check insurance references, all that good stuff for them. Once we accept them, they can subcontract to whoever they choose, hire whoever they choose to do the work. They can get the materials wherever they want. None of that's really a concern of ours. For our purposes, they're the responsible party at that point, and we're going to pay through them. Family members on FHA, there's a restriction. We can't use any family members. There can't be an identity of interest at all. On conventional, as long as we can go through that vetting process and approve them as the general, they can have a family member act as such.
That's good.
Is there a list of contractors that have already been approved?
There is not. Fannie Mae and FHA both restrict us from referring since we manage the money.
Okay.
We can't refer directly to the client. Sometimes we can talk through it with you. If you have someone, we can kind of do a preliminary review and just make sure there aren't any red flags that jump out.
How long does it take for them to get for a GC to be approved?
Once we have their paperwork, what takes the longest is getting their paperwork. Once we have their paperwork, 24 to 48 hours.
Okay.
So our process is the loan process itself. I mean, everything we do internally is super quick. There's a lot of moving parts and there's a lot of cooks in our kitchen. So, a lot of my time is spent wrangling people and paperwork and all of that and putting the package together. But our portions move pretty quickly once we have everything from whoever we need it from.
Great, thank you.
And that's all Tina does is renovation loans. So, I mean, we have a department that is their primary job, which is why it's so exciting for us, because if we only do, if we only work up one of these a month and we close one every 4 or 5 months, we can't call ourselves experts in that area. I mean, we can offer it, but we're not experts. Tina is an expert in that area, and she's in a department where that's all they do. Kim has a question. I'll reframe it. I'll ask it in a minute.
Okay, so I know we're talking about the loan process and all this. When you're doing a contract,
Oh, that's a good question. Okay. Okay, so Tina, we're writing a contract. We know that we're going to use 203K and it's going to have X number of work that needs to be done, but we don't know that yet because, I mean, we don't know for sure. We're just writing the contract. We don't even have an offer, accepted offer. How are we writing the contract? Are we writing it just based on the sales price?
Yes. So the contract is written just as you normally would, based as is condition, as is price, whatever you want to offer directly to the seller. We're going to add the rehab part on our end. What they do and how much it costs has no effect on the seller.
Okay, timeline wise though, you want to make sure that you have enough time to do diligence during option period. So what do you suggest on option period?
All of the contingencies, I mean, as long as possible on some of those things, because there are some unknowns when we go into this. I mean, when I do a pre-qualification, if they say they think it's going to cost 20, I'll bump it up some, because for one, we're not always realistic about what we think things will cost. And for two, on a lot of these, we start out with, I just want to get past an appraisal and I just want to move into my house. And then they spend the weekend at Home Depot looking at appliances and flooring and decide to throw in the fun stuff too, which is totally fine. We just want to make sure up front that it's really rare that we close with what we started as far as a budget. So I usually bump it up a little just to give us a little bit of extra cushion.
Because the one thing we want to do is make sure that they qualify for that amount of money. So they can drink all they want, but it's the debt to income still okay? Can I still get an approval? So we're going to bump it up and work off of worst case scenario and hope for the best case scenario. But timeline, this is where I think it's really important you guys do a cover letter to your offer and explain why you have a longer option period, because they're not going to see in the contract. If they go to the financing addendum and they see that you did 203K instead of 203B and they're paying attention, would be their first and only clue if it's a conventional loan. If you're doing, FHA, if you're doing a conventional loan, there's nothing that indicates to the seller that you plan on using a renovation loan. So that's where I think it's really important that you do a cover letter explaining to the seller why you did what you did in that contract. And go ahead and get that addressed up front instead of letting the seller or the seller's real estate agent try to read between the lines and make assumptions.
Well, and it sometimes makes for a really strong offer, because even though we might be asking for more time on some of these properties where, the seller, if there are issues, the seller often, or the listing agent often knows that there are issues, and they may just see FHA and say, nope, we can't accept an FHA offer. Or they may see the timeline and not want to give it to us. But basically what we're telling them with this is that we know there are issues. We're not going to nitpick you for all of the little things we want you to fix. We know there are issues and we're willing to take them on ourselves. So sometimes it makes a really strong offer to them, knowing that we've done our research and we're prepared to finance those and take on the repairs.
Yeah, what do you want for closings, Tina? 45 days?
I would say, generally I tell people to prepare for at least 45 days. It's really more of a case by case basis, because if there are major structural issues, we know that going in, and we're going to have to bring in an engineer before we can really proceed and determine, the loan itself doesn't take any longer than a regular loan. But the buyer needs some extra time to do their due diligence, choose a contractor, put together what they want to do, sometimes bring in additional inspections. That's really what the extra time is built in for. If it's a really complicated property or there is structural, we need engineering or an architect, any of those things, I would say try for 60. Although those are the cases when the seller generally knows their issues. And
that's what I was going to say. If you've got a house that has a cracked foundation and you're making an offer on it for financing, you got to put your financing your cover letter that you understand that there's structural problems, you're okay with it, and they're going to do a 2 or 3K full, or they're going to do a home style conventional loan. Explain we're going to take on the responsibility of fixing this, but we're going to need a little extra time. What are their choices? A cash transaction? Even the bank's going to require that they get the foundation fixed. The foundation, the roof has to be fixed on any loan program. And so then they're either restricting their buyer to cash only, or they find a buyer that has the ability, and a lender that has the ability to do a renovation loan. Before this, the only option I had to tell them is just go to the bank and see if they can get the money. But we all know that the banks are going to make a decision based on their relationship with that customer. Well, if it's a brand new customer that has never banked at that bank before, the bank's not going to stick their neck out for them. So I think this is if you need 60 days to close because there's a cracked foundation, just explain why you need that long. The house is falling apart, and we're willing to take this house that's falling apart, but we need enough time to put together all the numbers so we can put the house back together. It's a chess game, you guys. That's what we play all the time, is chess. On every offer, it's all about the strategy and the communication. And everyone, it's a puzzle. It's a puzzle and a chess game. That's what we play.
On a structural
pawns.
Michelle, on a structural issue though, does that have to be repaired prior to closing, or will you allow that to be after?
After the closing.
Okay.
Which is the beauty of using this program for foundation work. But you guys, if you've got a slab that's cracked and you're fixing the foundation, you better also figure in there a contingency to fix those pipes that broke when you raised the foundation back up. And then the cracked sheetrock that happened when you raised those walls. So you got to be thinking of all of those. It's not just fixing the foundation whenever you're doing a foundation as a repair.
Yeah, and we're doing all that due diligence before closing. So, we're not going to put them in a house that we're going to look at that, and we're not going to let them do a repair that's going to cause other damage and, not address that. So we're going to do all the due diligence, make sure everything's firmed up and finalized. We know exactly what's being done, that the house will meet lending standards once it's completed. All of that's going to be done before closing.
You guys got to remember, it's basically our house until they have it paid for. They're just paying us back. So we're going to do everything we can to protect our collateral, because we're trusting them to take care of it after they live in it. Those are all good questions. Does everybody feel like they have all of their questions answered? Do y'all feel comfortable enough that you can have the conversation and expose people to the what is and send them our way for the details? for those of you guys that are on the call and anybody that's listening to the call later, we will hopefully by Thursday send out a recorded version of this call. So if there's any questions that weren't addressed or were addressed and you weren't sure what the answer was, you can refer back to the recording or just reach out to us. My team is trained on renovation loans, and then whatever we aren't sure about, we have Tina available to us. Again, if you're going to make this part of your business and you're going to really wrap into being known for this, then I'm happy to sit down and put together a marketing strategy for that to be the case, so we can do some really cool stuff. If you just wanted this information so that you had it available for broken houses whenever you're showing them, or ugly houses, then I hope you have what you need, but I have more additional resources, some flyers that you can use. I can give you a copy of the slides. I don't have a problem with that. Whatever you need to be a resource for you guys to help you guys keep these moving and get buyers. All right, if you guys feel good about it, we'll call it all good. Next week we will, I'm pretty darn sure, what's next week on that schedule?
It is video, June 1st, video workshop.
Okay, video workshop. So I highly recommend you guys come in person and bring your phone, because it is a workshop. It is not just an exchange of information. I want you guys leaving the room knowing something you did not know before about taking or making videos and editing them. But Deborah, when she comes, she's all about not just content, but the strategy around what you're posting, when you're posting, and how to get the most amount of eyeballs on it. So you guys will learn so much from her next Wednesday. Again, I highly recommend that you bring your phone and come and do it in person so that you can actually get something out of it in a video made while you're here. Any other information that you need in to help elevate you guys in your businesses, life, and relationships, just let me know, because I'm happy to help. All right. Thank you. Thank you. Showing up. You guys are awesome. And make sure you guys grab my cell phone before you get out of here. If you don't already have my cell phone, text me and I'll share my contact the way I want you saving it in your phone. Not that I'm bossy, but I'm bossy. Bye, y'all.